Good evening, students. A very happy CA day to all of you. And I believe you all are working very hard to become a CA as soon as possible. So I am C. Ankit Sharma, your income tax faculty for the session. And today, this is our session number 2 for the topic that was TDS, Advanced Tax and TCS. So the remaining provisions of TDS and Advanced Tax and TCS, we will be discussing today. So there are some queries also. Asta is asking, sir, under section 192, only loss under house property to be deducted? Yes, exactly. Only losses under that house property can be deducted for calculation of TDS for the purpose of salary. Jainder is asking, no tax has to be deducted at source in respect of payment made by individual HUF to a contractor exclusively for personal purpose. This means even if turnover exceeding 1 crore or 50 lakh, yes, Mr. Jain, if the section 194C is applicable, if there is any work contract and the payment is going to be made only for personal purpose, then their TDS section 194C is not applicable, irrespective of the turnover. Okay. Tanu is saying happy CA day, sir. Happy CA day to you also, Tanu. Soumya also, a very happy CA day to all of you. 194 on cooperative land mortgage bank. If interest is paid to them by cooperative bank itself, then can it deduct TDS? Your question is, I guess, a little not complete. What exactly you want to ask? We have discussed the provision regarding cooperative bank. So how somebody can give interest to themselves? So whether kindly frame an example, Asta, if it's possible, so it would be really clear that what exactly you wants to ask. Harsha, good evening. Krishna, good evening. Rajveer, happy CA day. Ishan is saying illustration number 2C, we have to calculate interest monthly. Yes, I have given some homework examples to all of you. So we will discuss that. Page number 7.19, question number 2. Okay, we will discuss that, of course. Priyanshi is saying a man cannot be perfect. Maximum he can be a chartered accountant. Well said. Happy CA day. Okay, good evening, Arshada. So I have given an example also, illustration number, I guess 2, that was on page number 7.19, in which there was a calculation for interest, I guess, in case number 3. So we have to calculate that monthly. I guess illustration number 2, point number 3. I have asked you all that please try this question and try to calculate the interest. And I believe you must have tried that. And that was a very good question. And the calculation of interest should be monthly in this case. You should read this question very carefully, actually, because in this question it has been written that 6 months recurring deposit of 2 lakh rupees per month at 8% per annum. So let me show you the calculation. How do we calculate this to arrive at 28,000 rupees? I've already solved this. First of all, let me solve this question. So illustration number 2. In October, the interest would be on the deposit of 2 lakh rupees at 8% rate would be 16,000 per annum. But this amount is going to be deposited only for 6 months from October till March. So on only 2 lakh rupees, the interest for at the rate of 8% for 6 months would be 8,000 rupees. So on in case of November contribution, again 8%, 16,000, that amount is going to be invested only for 5 months. So that amount would be 6,667. So on the December contribution, the investment would be for 4 months. That would be 5333. So on, if we calculate, this is for December, then for January, it would be 3 upon 12. That would be 4,000. Then for February, it would be 2 upon 12. That would be 2,667. And for the month of March, that would be 1 upon 12. Only for 1 month, this investment is going to be invested. So the interest would be 28,000. And because it is less than 40,000, so there would not be any TDS implication. Okay, student? So if you have able to calculate this, this is really good. I appreciate that. Astha is asking on page number 7.32, what is periodical rent to be adjusted? So in case of rent, if you give some lump sum amount, suppose 5 lakh rupees and the monthly rent is suppose 20,000 rupees per month, then TDS provision would only is going to be applicable on that 20,000 rupees. The initial amount of 5 lakh, 2 lakh, whatever amount we have given, that is outside the purview of section 194I. But if suppose the tenant said that kindly adjust my rent from the lump sum amount I have deposited initially, suppose I have deposited 2 lakh rupees and the rent was 30,000 per month. So we have paid rent 30,000 per month from April for 3 months. So on that 30,000, section 194I provision would be applicable. After 3 months, tenant said that from July onward, kindly adjust my rent from the initial amount I have deposited with you, which was 2 lakh rupees. So the July rent has been adjusted again, that deposit of 2 lakh rupees, then on 30,000 rupees, TDS provision would be applicable. So if the periodical rent is going to be adjusted from the initial amount, lump sum amount paid by the tenant, then only TDS provision would be applicable on that. Okay. So moving ahead. So we have completed section 194I and we were discussing section 194IB. That is for those individual HUF. Those are not covered under section 194I. And we have discussed almost the complete provision of section 194IB, except the last point what we were discussing. So here is section 194IB. Applicability, we have discussed it. The rate was 5% and on or after 1st October, it is 2% now. Threshold limits 50,000 for a month or part of the month. Time of deduction we have discussed at the last month of the previous year, or if the tenant is going to vacate before that, then at the time of vacancy, we have to deduct the TDS. No requirement to obtain 10, meaning of rent you must have gone through. The 6th point was there and it says, where the tax is required to be deducted, we change the color of this. Where the tax is required to be deducted as per the provision of section 206AA, such deduction shall not exceed the amount of rent payable for the last month of the previous year or the last month of the tenancy, as the case may be. So now, if we solve illustration number 7, so you will understand how to implement section 194IB provision. Okay. So Mr. X, a salaried individual, so that is not covered with the limit of more than 1 crore or more than 50 lakh. He pays a rent of 55,000 per month to Mr. Y. So he is landlord, he is tenant, he is payer. Okay. From June onwards, is he required to deduct tax at source? If so, when is he required to deduct tax? Also compute the amount of tax to be deducted at source. Suppose, will your answer be changed if Mr. X vacated the premises on 31st December 2024? What would be your answer if Mr. Y does not provide his PAN number to Mr. X? So there are almost 3 questions we have to solve. First of all, assuming that there is no vacancy. From June, he start paying rent of 55,000 per month because the rent has been exceeding 50,000. So section 194 IB is applicable because that is a case of salaried person. Now you can see the implication. Since Mr. X paid rent 50,000 per month in the 24-25, 30th September 24, and thereafter 2%. The tax to be deducted in the last month of the previous year 24-25, that is March 25, or in the last month of tenancy, if the property is vacated during the year. Since the property is not vacated during the year, so the TDS liability would be 11,000. 55,000, rate is 2%, and the month is from June to March. So that would be 10 months. Has to be deducted from rent payable for the month of March 2025. So in the month of March, he was going to pay 55,000. Now he will deduct 11,000 and balance 44,000 he is going to pay to the landlord. Now the question was there also, extended question, and it was asking that Mr. X vacated the premises in December. So the provision says if you vacate the property before the end of the financial year, then TDS required to be deducted in the month of vacancy. So from June till December, he reside for 7 months. So now the rent would be deducted at the rate of 2% for 7 months, and that would be 7,700. So what he will do in the month of December, out of 55,000, he will reduce 7,700 and balance he is going to pay to the landlord. In case Mr. Y does not provide his PAN number to X, tax would be deductible at the rate of 20%. So higher rate of tax would be deductible if we do not provide our PAN number. This provision we are going to discuss later in this chapter. Case number 1 above, this would amount to rupees 1,10,000 rupees. If the 20% rate is applicable, then the TDS liability would not be 11,000, it would be 1,10,000 in the first scenario. But the provision says that you could not deduct the TDS exceeding the rent. So this 1,10,000 is going to be restricted up to 55,000. But if the property is going to be vacated in December and PAN number does not provide, then the TDS amount would be 77,000. In this case also, this would be restricted up to 55,000 maximum. Okay. Soumya is asking, sir, in section 194A, if a bank has adopted CDS, aggregate interest of all branches has to be considered? Yes, exactly, Soumya. Sir, explain illustration number 7 calculation. Illustration 7 we just discussed. Tanu, what is the requirement of again to recalculate it? This calculation I have just done for you. Till 30th September rate is 5%, then why only 2% deducted? Because if the monthly TDS required to be deposited in this case, as we do in section 194I, then we can separate that. But in this case, because the last month is the month in which you need to deduct the TDS. So what was the rate at that last month? That need to be applied. Suppose in this case, the property has been vacated in September. Then you can apply 5% rate, else the rate would be applicable, same rate on the same value which has been used. So if the property has been vacated after September, then the rate 2% would be applicable for all months of rental. Okay. So moving on to section 194J, and let me tell you, it's a very, very important section. And when I am saying this is very, very, very important, it does not mean that other sections are not important. Everything is important for your examination. Okay. But this is having some different kind of complexities, we can say, or there are some special provision. That's why I say that these are important sections. So under section 194J, if you will go with the heading, you will see this is for fees for professional or technical services. So you might be feeling that only 2 kinds of payment is considered in this section 194J. But that is not the reality. We have included professional services fees in this, as the heading notes, technical services as the heading denotes, and including also remuneration or fees or commission by whatever name called other than those on which tax is deductible under section 192 to a director of a company. So if you are a director of a company and company is paying if salary, then section 192 provision for TDS deduction would be applied. But if other than salary, any kind of remuneration, sitting fees, commission, whatever amount is paid by the company to the director, then section 194J provision is going to be applicable. So if it is other than salary, because if it is salary, section 192 will prevail. If it is not a salary, it's other than salary, then section 194J is applicable for the purpose of TDS. So you can see professional services, technical services, other than salary payment by a company to its director, royalty payment, non-compete fees. If any of these payment has been done, the TDS provision under section 194J is going to be applicable. Okay. The rate is notified 2% in case of fees for technical services, not being professional. If you are providing a technical services, if you are a payer and you are paying technical services fees, the TDS rate is 2% for technical services. Royalty services also in the nature of consideration for sale, distribution or exhibition of cinematographic films. So for technical services, it's 2% and 2% is for royalty if it is for exhibition of cinematographic films, and 10% in other case. So that means for professional services, for director's payment and royalty other than cinematographic films and non-compete fees, the rate would be 10%. We have a specific format also for this. However, in case of a payee, but the provision says, suppose if the payee is engaged only in the business of operation of call center, then the tax rate would be 2%, irrespective of it's a professional service, technical service, or whatever services it is. So if the payee is a call center, the rate under section 194J would be 2% in all cases. Got it? Time of deduction is same, credit or paid, whichever is earlier. Now threshold limit is 30,000. So we are having professional fees, technical fees, royalty, non-compete fees, and payment to director. The threshold limit is 30,000 and it is for each category separately. Suppose there is a payer, Mr. A, and a payee is Mr. B. So A is paying to Mr. B professional fees 20,000 in a year, and technical fees also paid by Mr. A to Mr. B 25,000 in a financial year. In this case, there would not be any TDS implication. So separately, we have to see, we cannot combine it as a person. So these are on the basis of, we can say payment wise, not the person wise. So if technical services, suppose in this case, the technical services is 35,000, then TDS would be applicable only on 35,000 and not on 20,000 value. So the separate limit has been specified, 30,000 for professional fees, same 30,000 for technical, same is for royalties, same is for non-compete fees, but in case of director, there is no limit. No threshold limit means any payment to director other than salary would be liable to TDS under section 194J. Understood? No deduction is required if the amount of fees or aggregate of the amount of fees created or paid or likely to be created or paid during a financial year. Student, I did not upload notes of this chapter yet because this is exactly study provision what we are discussing. And when we will complete this chapter, then I will upload this sheet in which I have made these marks and example. So after our third session, will complete. I will upload this sheet in which you can see the example, etc. Whatever I have notified would be on those sheet. So that would be really helpful for you. So I will upload it after our third session. Okay. So if does not exceed 30,000 in case of fees for professional, 30,000 in case of fees for technical, 30,000 in the case of royalty, and 30,000 for non-compete fees. So you can see there is no limit specified for director other than salary payment. Why it is not notified? Because there is no exemption benefit for director. The limit of 30,000 in section 194J is applicable separately for fees for professional, technical, royalty, etc. It implies that if the payment to a person toward each of above is less than 30,000, no TDS requirement. However, there is no exemption limit for deduction on remuneration fees payable to director of a company. No exemption benefit. So this is a chart. You would be able to understand the rate very easily. Fees for technical not being professional, it's 2%, limit 30. Professional 10 and 30. Royalty in the nature of consideration for sale, distribution, or exhibition of cinematographic film, 2%, 30,000. Other royalty, 10%. Director payment, 10%. And you can see there is no exemption limit in case of director. Non-compete fees, 10%, 30,000. If that is a call center, if the payee is a call center, remember payee, not payer. So if the payee is a call center, in that case, the rate would be 2% in each case. Okay. The example is very simple. XYZ Limited a payment of 28,000 to Mr. Ganesh on 2nd August toward fees for professional service, and another payment of 25,000 as technical services. So do TDS provision applicable? The answer would be no, because separate limit 30,000 did not crossed yet. Now, the important part in every section of TDS is when it's not applicable, or we can say a non-applicability, exemption, exception, etc. Again, the same case, individual HUF payer, those turnover less than 1 crore or less than 50 lakh in financial year 23-24. So section 194J does not applicable on these individual and HUF. We have discussed this kind of provision. Okay. I have also asked for that please make some short note of TDS provision. So any one of you tried making short notes? And if yes, after preparing those short notes, do you think that TDS provisions are that difficult? There are similar points you have to remember. Type of payment, limit of amount you need to cross, rate of TDS, and then some exception or exemption. Let me see who has done that hard work. Harshada is asking, while solving such question, do we need to mention provision of section 2? Yes, you have to explain provision in short at least, so the examiner would able to know that you know the provision. Harshada, I guess, try to, yes. Tanu is saying, yes, it's ED. So if any one of you have tried to make short notes, I can assure you, you would feel that these TDS provision and deduction chapter also I have requested you that please make short note. After making short note, these chapter would be really very easy to learn because there are some specific point you need to remember. And let me tell you, in examination, the question would be like this. As we solve illustration number 8, illustration number 7. So if you remember the limit and the rate, etc., then those questions would not be that complicated. Okay. Soumya is also saying that after making short notes, that is easy. Well done. So that was the first case. Again, there was section 194C. In that section 194C, there was an exemption that if payment is for personal purpose, residential purpose, or work contract, then no TDS provision applicable. The same benefit in a section 194J also exists, and that is only for professional fees. Understood? Since this provision requires such individual HUFs to deduct tax at source only in respect of fees for professional service or fees for technical service, it can be inferred that individuals in HUF are not required to deduct tax at source under section 194J on royalty and non-compete fees. Now, this is a very important point. I have drawn an chart also for this purpose, a short chart, so you would be able to understand. It's a very interesting point. Under section 194J, the provision says in case of individual HUF, if they are pair, and if suppose their turnover exceeding 1 crore or exceeding 50 lakh in previous year 23-24, then if they pay technical services or professional services, TDS provision would be applicable, and if they paid royalty or non-compete fees. Now, very interesting thing is, under section 194J, if individual HUF, if they are pair, and if they are paying technical or professional services fees, then TDS provision would be applicable. But if individual HUF, even as a pair, those turnover exceeding 1 crore of 50 lakh and they are paying royalty and non-compete fees, then there is no TDS provision applicable. Understood? Generally, individual HUF, if exceeding these limit, then that section applicable on those individual HUF also. But section 194J is having a special characteristics that if that is individual HUF, those turnover is exceeding this limit of 1 crore and 50 lakh. And if they are pair, then only in case of technical and professional services TDS provision would be applicable, even if his turnover exceeding 1 crore and 50 lakh. And if they pay royalty or non-compete fees, TDS provision is not applicable. And what if their turnover is less than 1 crore or 50 lakh? Then complete section 194J not applicable, whether it's professional service, technical service, royalty, etc. So even if individual HUF turnover exceeding and section 194J applicable, then only in case of technical and professional service it is applicable, not in case of royalty and non-compete fee. It's a very, very important point. And even if this case, if pair is individual HUF, turnover exceeding 1 crore and 50 lakh, and if individual pay for personal purpose, professional fees, then again no TDS. You can see a lot of exemption is there under section 194J. If individual turnover does not exceed 1 crore 50 lakh, then there is no question of section 194J applicability. If it is exceeding even that, on royalty non-compete fees, no TDS provision. On technical professional applicable, but there is also one exception that if individual HUF paying professional fees for personal purpose, then even there would not be any TDS. Suppose I am an individual, my turnover exceeding 1 crore in previous year 23-20. I am paying 50,000 professional fees to a doctor for my family member treatment. 50,000 for to a doctor for my family member or for my health problem treatment. So you can see, even if I am covered under this definition, but that is a professional fees which is going to be paid for personal purpose by that individual. So TDS provision would not be applicable. Understood? That's a very, very interesting provision. And why it is happening? Because if you go through with this point, it says individual HUF, those turnover exceeding 1 crore and 50 lakh will be included. And the section says only for professional services and technical services. So in this section, the non-compete fees and royalty does not include it. Director case would automatically be not applicable because in that case, the company is a payer. So individual HUF cannot be included in that case. So only they included technical and professional. So that's why this note explains the provision requires such individual HUF only for fees for technical and professional. So individual HUF are not required to deduct TDS at source under section 194J on royalty and non-compete fees, even if turnover exceeding 1 crore or exceeding 50 lakh. And that even in case of that individual, including for professional and technical, if it is for personal purpose, we have the exemption. Further, an individual HUF family shall not be liable to deduct income tax on a sum payable by way of fees for professional services in case such sum is credited or paid exclusively for personal purpose. So this is very, very important for the purpose of your examination. Now, what is the meaning of professional services? This is all for your reading. You can go through it. Meaning of fees for technical service, again, is for your reading purpose. Our case in point number 7 is TPAs, third party assistance, third party administrator. TPA is liable to deduct tax under section 194J on payment to hospital on behalf of insurance company. Now suppose here is a hospital. Here is Mr. A, who is a patient. So hospital provided services to Mr. A. Hospital is a company, suppose. So he's that company providing professional services to Mr. A for medical treatment, and the bill amount was 1 lakh. So if Mr. A is going to pay that to a hospital, and suppose Mr. A has been included for the purpose of this section, then in some cases, if suppose Mr. A is insured, he has an insurance, and the insurance company, suppose XYZ insurance company, is going to pay this amount to the hospital. Now the question arises that the payer was actual patient was Mr. A, and XYZ insurance company is a third party administrator. So that XYZ does not took that services. Who take these services? Mr. A took these services, not the XYZ insurance company. So in this case, whether this provision would be applicable or not, the answer is yes. If any third party administrator is paying on behalf of any person who received the services, then the section 194J provision would be applicable. The CBDT having notification number so and so clarify, who are making third party administrator who are making payment on behalf of insurance company to hospital for settlement of medical insurance claim, etc. under various schemes including cashless, etc. 194J on such payment to hospital, etc. This is because the service rendered by hospital to various patients are primarily medical services, and therefore the provision of section 194J are applicable to payments made by third party administrator to the hospitals. Okay, so this kind of question can be framed in the examination. So these kind of special point, exemption, these are important, very, very important. Consideration for use of right to use computer, of course, that would be a royalty kind of payment, and that is going to be taxed, or TDS need to be deducted under this section. You can read this provision, very simple point. Now section 194M, and it's a very interesting section. You might have seen that section 194C, 194H, and 194J. Okay, let me explain you a very interesting thing in this case. I have made a chart also for this. In our TDS provision, you must have seen that there are some sections in which individual HUF those turnover exceeding a specified limit is only included. So I have made a list of those payment. Before starting the class, I have already made this chart. Correct. In generally section, all pairs are included for the applicability of TDS provision. But there are some section in which individual HUF, those are not exceeding a specified turnover, has been exempted. So pair all included, but individual HUF need to deduct TDS in following section if their sale exceed 1 crore or receipt exceeding 50 lakh in financial year 23-24. So the list of those sections I have been prepared for you. Section 194A. In this section, only those pair included as individual HUF, those turnover exceeding this specific limit. Section 194C, that is for work contract. 194H, that is for brokerage commission. 194I, that is for rental value. 194J, that is for professional, technical, etc. And 194R, that we are going to discuss later. So, out of these 6 sections, you can see that individual HUF, those turnover is less than 1 crore 50 lakh has been exempted. So, they have technically escaped from the liability of TDS. As in case of section 194I also. But for section 194I, if you are an individual, those turnover does not exceed 1 crore 50 lakh. For that section 194IB has been prepared by the government. IB has been introduced by the government. In the same way, section 194M has been introduced by the government. The section we are going to study. Section 194M has been introduced for those pair individual HUF, those turnover is less than 1 crore or 50 lakh. And if they pay under work contract, they would not be considered section 194C. But those pair, those turnover does not exceed 1 crore 50 lakh. And if they are going to pay anything as a work contract, then for those pairs, section 194M has been introduced. So whatever section 194C exempted individual HUF for work contract, they has been included under section 194M. Same section 194H exempted those individual HUF, those turnover is less than 1 crore 50 lakh. But section 194M include these individual HUF also. So if individual HUF turnover is less than 50 lakh 1 crore, and if they pay brokerage commission, then section 194H will say, okay, you are outside our purview. But section 194M has been introduced that is going to include those kind of individual HUF. And out of section 194J, there were 5 payments. Technical, professional, and non-compete fees and royalty and director. Only professional fees has been included under section 194M. So those 3 categories, those 3 sections, which was not applicable on the category of individual HUF, those turnover is less than 1 crore 50 lakh. Those has been excluded under section 194C for work contract, for 194H for brokerage commission, and 194J for professional fees. These kind of payment has been included now under section 194M. If the payer is individual HUF whose turnover is less than 1 lakh and less than 1 crore and 50 lakh rupees. So understood what we are going to discuss under section 194M? So you will read under section 194M work contract. You will read brokerage commission. You will read professional services. So do not get confused. You might be going to think why we are reading work contract. We have already take this concept under section 194C. And same in case of 194H and same in case of 194J. So let me tell you the difference is the payer. The pair is those individual HUF, those has been not covered under section 194C or H or J. If any individual HUF has been covered under section 194C, H or J, that is cannot be included under section 194M. So did you understand the concept of section 194M? If yes, then we are going to move ahead. Pawan is saying, Tanu is asking if technical fees paid for personal purpose, then applicable. Yes, only professional fees is exempted if it has been paid by individual HUF for personal purpose. 7 point Hindi में समझा दीजिए. Pawan is saying, which is 7 point. Okay. पवन 7 पॉइंट कहता है टीपीए थर्ड पार्टी कि अगर कोई पेशेंट हॉस्पिटल में जाता है अपना ट्रीटमेंट कराने जिसका इंश्योरेंस है तो उसका पेमेंट इंश्योरेंस कंपनी करेगी हॉस्पिटल में. तो क्वेश्चन ये राइज हुआ, क्या उस केस में टीडीएस लगेगा इंश्योरेंस कंपनी पर? क्योंकि वो तो पेयर ही नहीं है, वो तो पेशेंट ही नहीं है, उसने तो सर्विस ली नहीं, सर्विस ली पेशेंट ने एंड पेमेंट इज डन बाय द इंश्योरेंस कंपनी. तो उसका आंसर है यस. तो थर्ड पार्टी केसेस में भी ये प्रोविजन वैसे ही एप्लीकेबल रहेंगे जैसे नॉर्मल केस में रहते हैं. शगुफ्ता इज सेइंग यस शी अंडरस्टूड section 194M applicability. Very good. So payment made by, you can see, individual HUF. So these are those individual HUF, those not covered under section 194C, H and J. Or you can see contract work, that is 194C, commission brokerage, 194H, fees for professional service, 194J. Now applicability, you must have understood that what we are discussing for the purpose of applicability. So it provides for deduction of tax at source at the rate of 5%, which would be reduced to 2% from 1st October. That is till 30th of September 2024. By an individual HUF responsible for paying any sum during the financial year to any resident for carrying out any work contract, commission brokerage, and professional fees only. Technical services not included. It may be noted that only individual HUF other than those who does not include under section 194C, H or J are required to deduct tax in respect of above sum. The rate is 2% from 1st October 2024. Time of deduction again the same thing, payment or credit, whichever is earlier. Now the threshold limit you can see, it's 50 lakh rupees. Before this, the highest limit was 2,40,000 in a year in case of section 194I. But this is 50 lakh rupees. No tax is required to be deducted where such sum or as the case may be, aggregate amount of such sum credited or paid to a resident during the financial year does not exceed 50 lakh rupees. Clear? Non-applicability, that is very, very important. The first point is exactly the same. If that work contract is included under section 194C, then 194M not applicable. The same point, if that brokerage is required to deduct TDS under section 194H, then 194M not applicable. And the same, if that professional fees is required to deduct TDS under section 194J, then 194M not applicable. No requirement to obtain 10. Now this example is very interesting and you would be able to understand the provision very easily and clearly also when we will go through with this example. Okay, this is page number 7.43. So one by one, we will read the condition. Mr. Ganesh or an individual carrying on retail business the turnover of 2.5 crore rupees in the previous year 23-24. So Mr. Ganesh is an individual and you can see the turnover is exceeding 1 crore. So if it is a work contract, now section 194C would be applicable or 194H or 194J. Now the payment is for contract payment for repair of residential house. So 5 lakh rupees. So whether TDS is required to be deducted or not. First of all, in this case, section 194C provision would be applicable. So is TDS going to be deducted section 194C or not in this case? Student, what do you think? Mr. Ishan is asking, sir, so this is service in nature of personal services. No, it's not necessary. It is in a personal nature. Technically, we are saying those individual which was outside the purview of those 194C, H or J, government just try to curb those also. Government do not want anyone to escape. So if they are paying more than 50 lakh rupees payment to anyone, in that situation, TDS provision would be applicable. So whether TDS required to be deducted, the answer is no. Well done, because this is for residential house. That is means personal purpose. Under section 194C, there is an advantage that if you are an individual and if you are paying for personal purpose, there would not be any TDS. So there is no TDS in this case. The reason is personal purpose. The second, payment of commission to Walish for business purpose. So this is section 194H. And because the payment exceed the specified limit of section 194H, in this case, TDS provision would be applicable. TDS is going to be deducted. Second case is very interesting. Mr. Rajesh, a wholesale trader whose turnover was 95 lakh rupees in previous year 23-24. So because turnover is less than 1 crore, so now section C, H and J would not be applicable. Contract payment. So that means we are discussing about work contract. So 194M is applicable. Now we have to see whether TDS required to be deducted or not. For reconstruction of residential house made during period January 25, and the payment has been made 20 lakh in January 25, 15 lakh in February 25, and 20 lakh in March 25. So total payment is 55 lakh. Now the question arises whether TDS required to be deducted or not. Section 194M we have discussed completely. The section has been over. We have discussed all the concept and provision of section 194M. So according to the provision, do we need to deduct the TDS in this case or not? Krishnapri is saying yes, Shagupta is saying yes, Harshada is saying yes, Nidhi is saying no, Soumya is saying yes. It is for personal purpose, students. You can see the payment has been made for residential house. So what should be your answer? Whether TDS should be deducted or not? Almas is saying yes, Pavan is saying no, Sunil is saying no. Anyone wants to change? Because turnover exceeding 50 lakh. But that is a payment for residential house, personal purpose. So that personal purpose benefit is there or not? And the correct answer is TDS required to be deducted. Yes. Why? Because it is exceeding 50 lakh. And that personal purpose payment benefit is only under section 194C. Not under section 194M. The 194C give you the benefit if it is for personal purpose, as we have seen in case number 1. We did not deduct TDS because the payment was residential house, but section 194M did not give any kind of benefit of personal purpose. So TDS need to be deducted. Satish, a salaried person, payment of brokerage for buying a residential house, March 2025, 51 lakh. Because exceeding 50 lakh, 194M applicable, TDS would be deducted. Dheeraj, contract payment made during November, October, reconstruction of residential house does not make a difference. Whether residential or commercial does not make a difference on section 194M. But because turnover is less than 50 lakh, the payment is less than 50 lakh, not the turnover. So that's why in this case, no TDS. Suppose if this is 58 lakh, then yes, TDS would be applicable in this case. Okay. The detail has been explained in the solution. You can go through it. You will understand exactly what we were discussing. Now section 194N. That is a different section. The nature of this section is different from all other sections what we have gone through till now. In the initial stage, the first day of this chapter, I have told you that for TDS, there are certain kind of income on which government has been imposed TDS provision. And if you will see from section 192, 194A, 193, 194C, H, I, IB, J, M, H, etc. There are payment from one person, but there are someone else who is receiving the income. So there is some income is generating. That's why TDS provision was there. And that was the whole concept of TDS. But section 194N has been introduced like 3-4 years back. And section 194N is not an income source on which TDS is there. There is no income source. So what it is? It is on cash withdrawal. If you are going to withdraw a certain amount exceeding a certain limit from a bank or cooperative society, banking business, or a post office in which your amount has been deposited, and if you're going to withdraw in cash, then after exceeding a certain limit, the bank, who is a payer in this case, going to deduct TDS on it. And that is section 194N. Section 194N provides that every person being banking company, cooperative society engaged in banking business, or a post office who is responsible for paying any sum, being the amount or aggregate of amounts. It's your amount in the bank. You have deposited it, whether via cash or via online transaction. But if you are going to withdraw it, and if it exceed 1 crore during the previous year, on the excess value, the TDS is going to be deducted at the rate of 2%. In all other TDS section, I also explained you that suppose the TDS limit is 30,000 in case of section 194J. And if the payment is 32,000, then TDS would be on full value. Whether it's section 194J, 194A, 190M, H, etc. But under section 194N, if the limit exceed 1 crore, the balance you will withdraw after 1 crore, only that amount is liable for TDS deduction. So there are two different, you can see nature under this TDS section. One is there is no income, and the other is the TDS would be on excess value. Suppose you are already withdrawn 1 crore rupees, and after that when you will withdraw 10,000, on that 10,000 only 2% is going to be deducted as TDS. I hope it's clear now. To any person from one or more accounts maintained by such recipient person with it shall deduct TDS at the rate of 2%. If a recipient is a cooperative society, tax is required to be deducted on any sum exceeding 3 crore. So if the person who is withdrawing the amount is a cooperative society, you can say the payee, the person who is withdrawing. The amount limit is 3 crore. Other than cooperative society, the amount limit is 1 crore. Okay. Time of deduction, of course, at the time of payment. No credit risk in this case. At the time of payment, the TDS is going to be deducted. Now there is higher limit also applicable in this case. The rate is 2%. But suppose there is an assessee, Mr. A, who wants to withdraw the amount from his bank account. Now, if for previous year 21-22, our previous year is 24-25. So the question says, the provision says, in the last preceding 3 years, that means 23-24, this is 24-25, 22-23, and 21-22. So if in all these 3 years, all 3 years, if Mr. A has filed his income tax return, if ITR has been filed in all these 3 preceding years, then the rate would be 2% exceeding 1 crore or 3 crore, as the case we have discussed. Okay. But if ITR has not been filed for any of these 3 preceding previous year case, the limit of 1 crore would be reduced to 20 lakh. After 20 lakh, TDS is going to be deducted. So if you have filed your ITR for all the 3 preceding years, the TDS is going to be deducted after exceeding 1 crore or 3 crore, as the case may be. But if you did not file your ITR in preceding 3 years, the limit of 1 crore would be reduced to 20 lakh, and the rate of TDS also is going to be increased. Let's see the provision. If the recipient has not furnished the return of income for all the 3 assessment years relevant to the 3 previous years for which the time limit to file ITR under section 139 has expired. In summary, if you did not file your 3 ITR on time, immediately preceding the previous year, our previous year was 24-25, in which the sum payment is made, the sum shall mean the amount or the aggregate amount, as the case may be, in cash exceeding 20 lakh. So the limit of 1 crore is going to be reduced up to 20 lakh rupees, and more to come. And the tax shall be deducted at the rate of 2%. The sum where the amount of aggregate of amount, as the case may be, paid in cash exceeding 20 lakh but less than 1 crore. So more than 20 lakh up to 1 crore. Look, up to 20 lakh, no TDS in this case. More than 20 lakh up to 1 crore, the rate would be 2%. And more than 1 crore, the rate would be now 5%. And this 1 crore would be replaced in case of cooperative society by 3 crore. So if exceeding 20 lakh, less than 1 crore, the rate is 2%. If it is case of recipient is a cooperative bank, 3 crore in case of cooperative bank. In case of cooperative bank, up to 20 lakh, no TDS. From 20 lakh exceeding till 3 crore, the rate is 2%. Exceeding 3 crore, it would be 5%. And 5%, the sum where the amount or aggregate of the amount, as the case may be, exceeding 1 crore or 3 crore in the recipient is a society. So if you are feeling that this is complicated, this is very confusing, just wait. Here's an example. You will be able to understand each and everything of it. So non-applicability, if the withdrawing authority is government, if the government is withdrawing from bank, then no TDS, cannot be, of course. If a bank is withdrawing his amount, if any business which is regulated by RBI guidelines, any white label ATM operators withdrawing cash, then on these cases, this section is not applicable. Now we have an example. After this example, you will understand what exactly we were trying to explain. Example says, suppose in point number 1 till 6, return of income has been filed up to due date. So what we are going to discuss? We are going to discuss point number 1 till point number 10. From point number 1 to 6, the question is saying, suppose in all 3 year ITR has been filed. So the limit is 2 crore or 2% rate. And from point number 7 till point number 10, ITR not filed in section 139(1). So that 2% and 5% provision need to be applied. Okay, so you will see this. This chapter is very huge, and I have to take example with every section because you would be able to understand the section only in that scenario. So I am trying to give you homework for only those questions. Those are very simple. I know this is complicated. So the person making the withdrawal is Harishit. Bank is SBI. Date of withdrawal is 1st July. The amount of withdrawal is 1 crore 10 lakh. So point number 1 till 6, we have to assume that the ITR has been filed. So up to 1 crore, there would not be any TDS deduction, and exceeding 1 crore. This is exceeding limit 10 lakh on 1st of August, and only on 10 lakh TDS rate would be 2%. Weber, 2 crore 10 lakh. So up to 1. The value was 1 crore and 20 lakh rupees. Up to 20 lakh, there would not be any TDS. Clear? Up to 20, no TDS. Then from 20 lakh till 1 crore, so we can say balance 80 lakh, the rate would be 2%. And exceeding 1 crore, the balance value is going to deduct TDS at the rate of 5%. Up to 20, no TDS. From 20 till 1 crore, rate would be 2%. Exceeding 1 crore, the value is going to be deducted TDS at the rate of 5%. Mr. Rakesh, 45 lakh. So up to 20 lakh, no TDS, balance would be liable at the rate of 2%. PQRA Cooperative Society, 3 crore 30 lakh. So again, up to 20, no TDS. From exceeding 20 lakh up to 3 crore. So the balance between 20 lakh and 3 crore is 2 crore 80 lakh. The rate would be 2%. Exceeding 3 crore, we are having 30 lakh rupees remaining. So rate would be 5%. I hope it's clear now. So general query in case of systematic withdrawal plan will follow section 194N. Whatever cash withdrawal it is, if it is exceeding the specific limit, Harshada, TDS section 194N will be applicable. Priyanshi is asking, out of 3 year, any one ITR is not filed, this will apply. Yes, because we need all 3 year ITR should be filed under section 139(1). If any of it did not file, then you have to go for this 2% and 5% rate provision. Okay. Other TDS provision in a table form, and we are going to discuss those provision in this form. First is dividend. Before dividend, there is one more section that is in PDF. Just a second, students. It's page number 7.49. So these are the provision we have to go through with this chart. Section 192, that is for premature withdrawal from employees provident fund. Section 192A. Clear? If the payment or aggregate payment exceeding 50,000. So if there is a premature withdrawal from employee provident fund, and if it is exceeding 50,000, then TDS required to be deducted at the rate of 10%. Other relevant provisions are withdrawal after 5 years of continuous services. So exemption of TDS, if you withdraw from your employees provident fund after 5 years of continuous services, there would not be any TDS provision applicability. In case of withdrawal before continuous 5-year services, even in that case, exemption would be there if you fall in point number A or point number B. Employee opts for transfer of accumulated balance. If you transfer your provident fund from one employer to another employer. In the salary head, you must have gone through with the term that's called transferred balance. Transfer balance means when an employee transfer is provident from one employer to another. In that case, there would not be any TDS concept applicable. Or B case, termination or withdrawal is due to ill health or discontinuance of business or cessation of death of the employee. Cessation of employment in this case. So if these A or B case applicable, then even before 5 years, if you transfer or withdraw it, there would not be any TDS applicability. Section 194 is for dividend. Dividend including dividend on preference share also. If the amount or aggregate amount exceeding 5,000 in a financial year, in case of dividend paid or credited to an individual shareholder or by any mode other than cash. So if any individual shareholder is receiving dividend which is exceeding 5,000 in a financial year, then TDS would, if from section 222A till 222F, that means including deemed dividend also. So if any company pays dividend or deemed dividend to an individual shareholder, then up to 5,000, there is no TDS. Exceeding 5,000, there is TDS concept. If the payment is to any other person except individual, then the threshold limit is no exemption. Even if 1,000 has been paid, TDS need to be deducted at the rate of 10%. Exemptions, dividend credited or paid to, if the payee is LIC, GIC or government department, in that case, there is no requirement of deduction of TDS. There is a general advantage. If the payee is the government department or bank or LIC, etc., then there is no requirement of TDS deduction. So in case of dividend, what the provision exactly is, if that is a company and the dividend, whether it's normal dividend or deemed dividend to an individual shareholder, the threshold limit is exceeding 5,000, TDS provision would be applicable at the rate of 10%. If it is other than individual, in that case, there is no threshold limit. TDS applicable. No exemption limit. TDS always. That was section 194A. Moving on to section 194B. That was our section 194. Now section 194B is very simple. It is in case of casual income, winning from lottery, crossword puzzles, etc., etc. The rate of casual income was 30%, and you can see the rate of TDS also in case of casual income is 30%. So winning from any lottery, crossword puzzles or card game, etc., gambling, etc., if the amount exceeding 10,000, in that situation, TDS required to be deducted at the time of payment, and the rate of TDS is 30%. Where the winning are wholly in kind or partly in cash or partly in kind, but the part in cash is not sufficient. This point we have already discussed in earlier section also, 194BB, we have discussed that point, so you can go through that. This is new point, where winning are to be credited and losses are to be debited to the individual account of the punter. Punter means the person who is gambling there, the payer, the assessee. Tax has to be deducted on winning before set-off of losses. Thereafter, the net amount after deduction of tax and losses has to be paid to the winner. Now, suppose a punter or assessee, suppose Mr. A, went to a casino and there are multiple games. Suppose he won one game for 1 lakh rupees. In the second game, he lost 28,000. So the net winning, what he will receive from that casino would be 72,000. The net payment the casino will going to pay to Mr. A would be 72,000. But this is not the complete picture. The point number B says that in case of TDS provision, we will not consider this loss. The payer, that means the casino person, has to deduct TDS on 1 lakh rupees. So the TDS would be 30% of 1 lakh, that would be 30,000 rupees. So the punter, that means Mr. A, would not going to take 72,000 from that casino. The TDS also need to be deducted by the payer out of the winning. And the remaining 42,000 would be the amount which is going to be received by Mr. A, who is a punter. Understood? So for the purpose of TDS, losses will not be considered. The amount of winning, that is required to be checked for the purpose of this, and that amount need to be deposited at TDS. And after that TDS and the losses, the balance can be received by Mr. A. In both the cases. So even if winning from horse race, the amount, if it exceeding 10,000, TDS need to be deducted. The rate is again 30%. Horse race means you can read these provisions, normal provisions are there. Now section 194DA. Any sum under a life insurance policy not covered under section 1010D. Not covered under section 1010D. So you might remember the provision of income from other source in which we have discussed this section 1010D. So if a certain amount of premium exceeding 5 lakh rupees or 10% of the sum assured, if more than that premium has been paid, in that situation, the amount received on maturity of those insurance policies, life insurance policy, is not going to be exempted. So if those are not exempted, then TDS is going to be deducted under section 194DA. So the point says if that policy does not fulfill the condition of section 1010D, that means exemption of life insurance policy receipt. So if it is not exempted, then TDS would be applicable. If that life insurance policy payment is exempted under section 1010D, of course, there is no requirement of TDS payment. TDS would be applicable if the amount is exceeding 1 lakh rupees. The rate of interest is 5%. Exemption, the simple exemption is there that if it does not exempt under section 1010D, the rate from 1st October is 2%. Earlier it was 5%. 194G is for commission on lottery ticket. When we have gone through with section 194H, that is for commission, I have explained to you, this is the commission other than insurance commission and lottery commission. So this is 194G for lottery commission provision. So if you are a lottery agent and if you are receiving commission from the lottery company exceeding 15,000, then TDS rate would be 5% and after that 2%. You can go through with the other normal provision. The rate and the amount is very important. 194IA. So 194 को आपने बुलाया IA and 194 आ गया. So 194IA is for payment on transfer of certain immovable property other than agricultural land. So if you transfer any immovable property other than agricultural land, then TDS need to be applicable or need to be deducted according to section 194IA. The amount limit is if the amount exceeding 50 lakh, the provision says 50 lakh exceeding, whether it's your consideration or stamp duty value, any of it if exceeding 50 lakh, any of these values, then section 194IA would be applicable. Suppose the consideration is 45 lakh and stamp duty value is 51 lakh. That means section applicable. Suppose the consideration is 52 lakh, stamp duty value is 49 lakh. The provision has been applicable. Suppose the consideration is 48 lakh and stamp duty value is 49 lakh. In this case, section not applicable. Okay. The rate is 1% of consideration for transfer or stamp value, whichever is higher. Now, TDS would be applicable at the rate of 1% on stamp duty value or the consideration, whichever is higher. TDS rate would be applicable, whichever is higher. The other provision you can go through yourself. General provision, it says the parking fees, etc., would be the part of your consideration. It needs to be included. So till section 194IA, we have completed our provision. And I guess, let me take any query, then we will go for a short break. Priya is again saying the same case, query actually. Sir, इतने सारे कैसे याद होंगे? How to put everything in brain? Very good question. You know, we utilize only 2 or 3% of our brain capacity, and in this 2 and 3% of our brain capacity, we have remember all our memories from our childhood till now, the study subject, etc. And this only 3 or 4%. Only we are able to use 3-4%. Utne mein hi scientists reaching to moon, they are making rockets, bomb, technology, AI. So do not think that brain power is less. If you are able to utilize your brain completely, you can do wonders. That's not practically possible. There's a Hollywood movie, Lucy, and it explained very technically, very scientifically that how powerful your brain is. तो शॉर्ट नोट बनाइए. मैंने अभी बाकी बच्चों से भी बात करी थी, प्रिया, और बच्चों ने कहा कि सर हमने शॉर्ट नोट बनाए हैं और हमको अब वो इजी लग रहा है. तो प्रिया, क्या आपने शॉर्ट नोट बना के ट्राई किया? देखो, सिर्फ कहने से तो काम नहीं होगा. मैं यहाँ पर आपको लेक्चर देता रहूं कि ऐसा कर लो, ऐसा कर लो, और अगर आप उसे इंप्लीमेंट ही नहीं करोगे तो बड़ी प्रॉब्लम होगी. लेट मी शो यू टुडे थॉट फॉर द डे, what we did not actually discuss, but I guess this is the right time to tell you that success is no accident. It is actually your hard work, your perseverance. This is a very interesting word. इसका मीनिंग सर्च करना बड़ा इंटरेस्टिंग है. दैट मीन्स परसिस्टेंस. किसी भी काम में आप लगे हैं तो लगे रहिए विथ फुल डेडिकेशन, स्मार्टली काम को करना. सो इट्स योर हार्ड वर्क, परसिवरेंस, लर्निंग, स्टडिंग, सेक्रीफाइस, एंड मोस्ट ऑफ ऑल love of what you are doing or learning to do. So if you are actually love to become a chartered accountant, if you want, this is your dream, you have to do these things: hard work, learning, etc. This is the part, these are the ingredients to the, it's a kind of a recipe to become a chartered accountant, and these are the components, these are the ingredients which we need to become a chartered accountant. So please aap ek baar short note banao, and I believe you would be able to understand these provision easily than before. Okay. So Ashok sir, can we go for a short break? copy, etc. Give you energy. So we were discussing the provisions. Soumya is asking, sir, please say a short story. Okay, I will try. Because it's a very huge chapter. We have to complete a lot of provision. So I just wanted that due to, first of all, we have to cover that syllabus. And then if we will have spare time, definitely I'm going to tell you a very interesting story. Okay, so we have section 194K is here now on page number 7.55. So section 194K is that is income on units other than in the nature of capital gain. So we are talking about income on units like mutual fund, etc. So if you redeem them, if you transfer them, there would be capital gain. But if there is a regular income from it, the TDS required to be deducted under section 194K. So if the amount exceeding 5,000 in a financial year, simple provision, the rate would be 10% at a time of credit or payment, whichever is earlier. So you can see in this tabular form, there are simple provision, not having much detailed concept like section 194J, section 194A, section 194C, etc. So what you can do in this table, you can learn the section, the income which is going to be deducted TDS, the amount of aggregate amount of limit, and the rate of TDS. There are not much exception and exemption cases in these kind of section. Section 194 LA, that is for compensation on acquisition of certain immovable property other than agricultural land situated in India. So this is regarding compulsory acquisition. You must have remembered where we have discussed the provisions of compulsory acquisition. That was in capital gain. So if you receive compensation, whether OC or EC, original compensation or enhanced compensation, if the aggregate you received more than 2,50,000, then there is TDS of 10% at the time of payment. TDS provisions are not applicable on compensation on acquisition of agricultural land in India, whether rural or urban. So that is a simple section. 194P, that is for pension. So if there is a payee who is receiving pension along with interest on bank account also. So suppose there is Mr. A who is retired, who is receiving his pension in his SBI bank account and also receiving interest in this SBI account, then TDS provision section 194P is going to be applicable. Basic exemption limit, of course, the exemption limit up to which there is no tax, that in case of default tax regime, up to 3 lakh rupees. So under default tax regime, if it is up to 3 lakh rupees, there would be no TDS provision under section 194P. If your pension is up to rupees 3 lakh with interest. If that is not a default tax regime, if it is optional tax regime, then that could be 3 lakh or 5 lakh. So up to 5 lakh or 3 lakh as the case may be, there would not be any TDS provision. Notified specified bank should be the payer. The person should be, the receiver should be specified senior citizen. Rates in force. What would be the rate of TDS? It would be like normal calculation of tax, because it is like salary calculation. Pension is the part of your salary income kind of. So suppose somebody is receiving under default tax regime, you are receiving 8 lakh rupees pension. So how TDS is going to be calculated? Up to 8 lakh rupees, whatever is the tax amount as per the slab rate of default tax regime, that is going to be your TDS value. So rate in force, where the individual has exercised the option of shifting out of the default tax regime, If you are going into optional tax regime, that rate need to be applicable. If you are going through default tax regime, those tax rate need to be applicable. The important thing in this section is this part. A specified senior citizen means an individual being a resident in India who is the age of 75 years or more. So generally, senior citizen is treated when somebody is achieving or attaining the age of 60 years or more. But for the purpose of this section, the specified senior citizen has been explained over here. So the age should be 75 years or more, must be resident in India. And the exemption is having pension income and no other income except interest. And interest also should be received in the same bank account in which the pension is going to be received. Interest income received or receivable from any account maintained by such individual in the same specified bank in which he is receiving his pension and has furnished a declaration to the specified bank in this regard that I have only pension income and only interest income and I do not have any other income. If these condition has been fulfilled, in that case, that person does not require to file his income tax return. A specified bank need to compute the total income for the relevant assessment year. That specified senior citizen who furnished declaration after giving deduction, ATC, etc. So bank will check that you have submitted all the provision, deduction, etc. after providing all rebate, etc. The provision of section 139 relating to filing of return would not apply. So if you are having an age of 75 years or more, you are a resident, you are only having your pension income and no other income, only interest income, and this interest and pension comes into the same bank account. In that situation, you do not require to file your income tax return. If TDS has been deducted properly, would not apply to a specified senior citizen for the assessment year relevant to the previous year in which tax has been deducted. So if tax has been deducted, then that person is not required to file the income tax return. So the benefit, the exemption we are discussing in this point is just to understand when this specified person is not required to furnish return of income. So if he is earning only pension income and interest income in the same bank account, he declared his income to the bank and it has been noticed by the bank that all the required TDS, all the required tax has been deducted as TDS under section 194P, then that person is not required to file his income tax return. So the benefit is for not filing of income tax return under this section. 194Q is a very, very important section. And this 194Q we are going to discuss with section with TCS provision, because this is correlated with some TCS section 206C1H 1G 1F. So we will discuss it with TCS provision later in this chapter. 194R. Any benefit or perquisite, whether convertible into money or not. So if you are running a business, suppose you are running a business, you have an agency, you have a car showroom. And suppose Maruti car showroom. So the manufacturer gives you a target. As an employee receive target from the company, in the same way there are businesses who receive target. And manufacturer asks that if you are able to sell Maruti 100 cars in a month, then we will provide you some perquisite, some benefit, whether in monetary form or non-monetary form. It could be a vacation trip, It could be a free Activa or anything. So as an employee receive perquisite, the TDS is going to be deducted under section 192. But if a business receive a perquisite due to a commercial activity from the manufacturer or distributor or from whatsoever person, the TDS required under section 194R. So any benefit or perquisite, whether convertible into money or not arising from business or exercise of a profession, the provision would apply to any benefit or perquisite, whether in cash or in kind. So please remember, this is not a perquisite which we have discussed in salary chapter. In that case, employees receiving perk from employer. So section 192 apply. But this is a business receipt from the manufacturer, distributor, etc. So value of the aggregate benefit of perquisite, if it exceeding 20,000 rupees in a financial year, TDS need to be deducted under section 194R. Any person, all included, all payers are included except individual HUF not exceeding that 1 crore or 50 lakh rupees limit. Pay could be any resident. The rate of TDS is 10% of the value of the aggregate value. So you can go through with this provision also. So these are the provisions. Section 194R we have completed. So on, this table has been done. Now illustration number 10, and this illustration number 10 is your homework. Illustration 10 and illustration 11 also. Let me show you those illustrations in this sheet. You have to solve it yourself. Illustration number 10, you have to solve it yourself. That's homework for you. It's a very simple regarding section 194DA. So 194DA is for insurance TDS provision. So you have to remember those income from other source limit. If the premium is not exceeding the specific percentage and amount, and if section 1010D apply, and if it is exempted, then in that case, no TDS. If it is not exempted in section 1010D, then TDS provision would be there. Very simple provision. Then illustration number 11, that is regarding transfer of agricultural land. So this is a concept of section capital gain procedure and TDS. Both is going to be asked in this question under section 194IA. We have discussed that if you transfer any immovable property except agricultural land, then section 194IA is applicable. If the stamp duty value or consideration exceeding 50 lakh rupees, and TDS would be applicable 1% on the stamp duty value or consideration, whichever is higher. So the TDS point is very simple in this case. Point number 3 is there. Okay. So in this example, technically, the higher of consideration and stamp duty value was 60 and 85. So higher was 85. So 1% would be 85,000. Very simple implication of TDS provision. This is for that section we were discussing regarding pension. This is also for your homework. Very simple implication. You need to just calculate normal tax as per the procedure. And then you can see how to implement that section, what we have discussed. Okay. 194P provision we are going to discuss. Income payable net of tax. Kindly read it. The grossing up concept. Let me tell you what is the grossing concept it is. And when the amount is net of tax, what we need to do in the question. Look, there are certain income on which TDS has been applicable. What are those income? We are going through with that provision. If in the examination, suppose commission has been given in the question. Okay. So commission income has been given in the question and it has been written gross commission. So if any payment or income on which TDS provisions are applicable, and if the word has been used gross, so gross means TDS has not been deducted yet. So suppose questions say that Mr. A received gross commission 1 lakh rupees. So for calculating Mr. A GTI under income from other source, we will include commission 1 lakh rupees because TDS has not been deducted. Suppose it has been written like this also, commission from one more organization net 90,000. So if net word has been used or the received word has been used on those income on which TDS provisions are applicable. So that means on this income, TDS has been deducted. So when you will include this commission for the purpose of its calculation of GTI or TI, then we have to find out the gross commission, that is before TDS. So if the rate is 10%, suppose TDS has been deducted at the rate of 10%, suppose. So that means this is equivalent to 90. So my total income would be 1 lakh. In the same way, suppose in the question, lottery winning received 70,000 has been given in question. So that means on this lottery winning, TDS has been deducted because it is exceeding 10,000. Up to 10,000, there is no TDS requirement. And the received or net worth, if used, that means these incomes are after TDS. So if under income from other source, casual income, I need to include it as a gross value. So what is the TDS rate on lottery winning? That's 30%. So this is equivalent to 70%. Because after 30%, the balance is equivalent to 70%. So I have to include this casual income also at 1 lakh. Understood? So those income, those are liable to TDS. Suppose in the question, it has been written net profit from business. Net profit received from textile business. And suppose it has been written 9 lakh rupees. So net word has been utilized, received word utilized, but this net profit from textile business does not fall under any TDS heading. So you cannot gross it. This business would be included as a net profit under PGBP head, net profit directly 9 lakh rupees. So if any of those income in which or upon which TDS provisions are applicable and the limit has been exceeded, then if those income has been given as net or received, you have to include as grossed up after doing grossing up. So what could be the formula for grossing up? We can make a formula of this net income or received upon 100 minus TDS rate into 100. So this is the formula we are using for the purpose of grossing up. I hope you understand. Okay. Ms. Harshada is asking, do we need to check whether agricultural land is an urban or rural? For the purpose of TDS provision, we do not need to check it. If it is an agricultural land, no applicability of TDS provision. Okay. So this is crossing up what we were discussing. Now these are for your reading purpose, student. What of provision for your reading? Certificate of deduction of TDS at a lower rate. Generally, these are all theoretical provision. So you just read it through because for the purpose of examination, generally they will ask you how to calculate TDS, etc. But this is for your knowledge. Under this section, the rate, whatever we have discussed, it could be lower. But for that purpose, the assessing officer or the proper officer will give you the permission. Then TDS could be deducted at lower rate also. Point number 5 also for reading. These are all for reading purpose. We have to submit some declaration for not filing. Suppose there is a person whose income is not exceeding the basic exemption limit. So if there is any person whose income is not exceeding the basic exemption limit, and if the payer is going to deduct the TDS, then in certain cases he can ask that kindly do not deduct the TDS. So there are certain forms you can file for that purpose, section 15H form, there is 15G form, etc. On the basis of which, if it has been proved that I do not have any income which is chargeable to tax, or my income is not exceeding the basic exemption limit, in that case, the TDS deduction could be stopped. But for that purpose, there is specific process. You have to take the permission from that payer also, and that payer will inform this thing to the income tax department also. So time limit for delivery of one copy of declaration, and you need to send this information to the principal chief commissioner or chief commissioner or principal commissioner or commissioner, one copy of the declaration. In that case only that they may allow that no deduction of TDS in your case. These are just for reading purpose. In a basic concept topic, chapter 1. And after that, we have discussed a chapter, residential status. In that residential status chapter, there was a concept of incidence of tax. And there is a concept of income arise or deemed to arise in India. And there was a concept also income received or deemed to received in India. So income deemed to received in India, I have gave you example of TDS. In notes also it has been mentioned that TDS would be treated as income deemed to received in India. And other was black money cases. Section 69, 69A, B, C, D, like that. So why TDS is treated as deemed to received in India? Because suppose your payer going to pay you 1 lakh rupees to Mr. A. But 10% TDS has been deducted by the payer. So you are receiving only actually 90,000. But this 10,000 also going to be treated as your income. So for the purpose of your GTI, we need to include the gross income, that is before TDS. So even if you actually receive 90,000, this 10,000 is assumed deemed to received in your hand because it has been deposited by the payer to the income tax department on your PAN number. So it is not actually received, but it is always deemed to be received. So this concept is now explained in this point. That is also for your reading purpose. Whatever tax you will pay, you will get the benefit of that tax at the time of filing of your return. Whatever would be your tax liability, your TDS is going to be deducted from your tax liability. Just like ITC in case of GST. So a lot of things for reading purpose. You can correct your mistake in TDS return. So TDS payer, if you fall in the definition of payer for deduction of TDS, so it's a very you can say headache task, because first of all you have to deduct the TDS from the payee amount. Then you need to deposit it. And we have read the provision in our first session that if you did not deduct it or did not deposit it, there is some interest applicability. 1% if you did not deduct it. If you deduct but did not deposit, then 1.5% per month interest need to be charged upon payer. And after that, the payer needs to file TDS return also. So there's a lot of work if you fall in the definition of payer. So you have to do a lot of compliances, deduction, deposited, and filing of TDS return. And if you did not file TDS return, so 200 rupees per day could be a late fees for every day of your default, which can be maximum up to the TDS amount. This is the fees penalty we were discussing. So if you fall in the definition of payer, So it is really a very difficult compliance procedure. So that's why those individual less than 1 crore turnover, less than 50 lakh receipt has been outside those TDS compliances. So if you are not included in the definition of payer, that is a good news for you, because that is not easy for any salaried person or any person who is undertaking a very small business to comply with all those rules and regulations. So only those individual HUF include those turnover exceeding 1 crore and 50 lakh. And those individual HUF turnover is less than include only when they are paying more than 50 lakh, etc. So they are big people who are paying 50 lakh or more than for work contract. Section 194 IB, for those individuals, those are paying more than 50,000 per month rent. So for those person, government say yes, these individuals should follow these compliance provision. Some question, Miss Geeta is saying, good evening. Query portal. Yogesh Gokul on query portal asked, sir, if in a lottery winning, suppose he won 1 lakh rupees and in second he lost 1 lakh, then TDS on 1 lakh he has to pay. Whether he is not receiving anything, but upon 1 lakh rupees, the TDS liability would be there, because income tax does not recognize the loss part. Okay. Consequences for failure to deduct. AA provides that any person whose receipts are subject to deduction of tax at source the deductee shall mandatorily furnish his pen to the deductor. This is an important provision for the purpose of examination for the numerical question, failing which the deductor shall deduct tax at source at higher of the following rate. So if the payee did not submit his pen number to the deductor, then the rate of TDS would be higher. And what would be the highest rate? The rate prescribed in the Act. Suppose the rate prescribed in the Act was 5% in certain cases, or the rate in force, the rate mentioned is Finance Act. Suppose Finance Act has changed it to 2%, or the rate is 20%, which is fixed. So the highest of these three rates is going to be applicable. So that would be 20%. 5% in respect of, instead of 20% under section 194Q. So 194Q we will discuss this section of TCS concept. So either the rate prescribed in that, or as per the Finance Act, or the 20%, whichever is highest is going to be applicable. Suppose there's a case of casual income. In case of casual income, the rate prescribed is 30%. In the Finance Act also 30%. But the third rate would be 20%. So in case of casual income, even if payee did not submit the PAN number, the highest rate would be 30%. Even if he submit, still it would be 30%, because the normal rate in case of casual income is 30%. So in those cases where the rate is more than 20%, this section would not have any effect. But for those cases, the rate is less than 20%. In that case, 20% would be charged in those cases where PAN number has not been submitted by the payee. Clear? You can see in case of lottery winning, etc., the rate would be 30%. So this section would not be able to apply in that case. Nidhi is asking, sir, in Hindi this logic. निधि इतना लेंदी चैप्टर है, हिंदी में समझाऊंगा तो कैसे चलेगा, चलो बता देता हूं. ठीक है. प्रोविजन कहता है कि टीडीएस के जितने भी सेक्शन आपने अभी तक पढ़े हैं, उसमें अगर पेई मतलब जिसको पैसा मिल रहा है, उसको अपना पेन नंबर सबमिट करना है. अगर वो पेन नंबर पेयर को सबमिट करेगा तो टीडीएस उस रेट से कटेगा जो सेक्शन में मेंशन है. जहां 2% है वहां 2 से, जहां 5 है वहां 5 से, जहां 10 है वहां 10 से. लेकिन अगर पेई ने अपना पेन नंबर नहीं दिया तो फिर टीडीएस कटेगा इन तीनों में से हाईएस्ट रेट से. वो रेट जो एक्ट में लिखी है, जो मान लीजिए 5% थी अप टू 30 सितंबर कुछ केसेस में, फिर हो गई 2%। तो वो रेट जो एक्ट में मेंशन्ड है और वो रेट जो फाइनेंस एक्ट ने जो बजट में इस साल हो गई है वो ज्यादा भी हो सकती है और कम भी हो सकती है। और तीसरी रेट है 20%। तो इन तीनों में से जो हायर रेट है उस रेट से टीडीएस काटा जाएगा अगर पेई ने पेन नंबर नहीं दिया। अब कैजुअल इनकम के केस में रेट 30% है, तो उसमें अगर वो पेन नंबर ना दे तो भी ये रेट 30 है, तो हाईएस्ट 30% आए, और वो पेन नंबर दे दे तो भी 30% ही कटेगा। तो उन केसेस में जहां रेट 20% से ऊपर है वहां पर आपको इस प्रोविजन से फर्क नहीं पड़ेगा, बट जहां रेट 20 से नीचे है वहां गुड। चलो, मूविंग ऑन फर्दर। So if you will not furnish your PAN number, TDS would be charged at higher rate. And there is one more thing, higher rate of TDS for non-filers of income tax return. So if you do not file income tax return also, in that case also TDS rate would be higher if you did not file your ITR. So this is for your reading purpose. If you did not file your ITR, then twice the rate prescribed in the act. If the rate is 5%, that means twice. 10% would be here. Twice the rate as mentioned in the Finance Act. If rate is 2%, that would be 4% or at 5%. However, section 206AB is not applicable on these sections. So except these section, if there is any other section and in which that return has not been filed, in that case, TDS would be chargeable at the highest rate. Read this provision. If there's any problem, I will definitely going to explain it. Okay. This is applicable for only these person. So this concept, whatever we have just gone through for filing of return, is applicable on these person, specified persons. So if these persons are there, in that case, if they do not file their return of income, then TDS would be twice the act rate, twice the Finance Act rate, or 5%, whichever is higher. Clear? Now the next concept of advance tax is here. So TDS ends. I understand students because I have been in teaching from last up to I guess it's more than 20 years. So I personally know that these TDS concept and deduction concept actually are very difficult to learn. But there is only one solution because you have to, you don't have any choice. You cannot say that I will leave these topic for in examination. What if in the examination at TDS concept and deduction concept has been asked for 20 or 15 marks? There is no specification that for how much marks any individual chapter is going to be asked. So please do not leave it. Just a single solution. Let me tell you, just try to make short notes. And let me tell you, those section, whatever we have gone through, only some specific points you have to learn in those short notes. Once or twice you will revise those short notes of deduction and TDS. Definitely you will feel that these topics are not that difficult. Okay. Next topic is advance tax. This is, in my opinion, is really interesting to understand also, and this is logical also. It's a single topic, advance payment of tax. 20 Priya is asking, sir, what does this line mean that section 206 is not applicable in case of tax deductible at source? I have just asked you that please try to read it today, and then if there is a problem, I will solve it day after tomorrow. But for the time being, let me explain you. It says that this return filing is mandatory. If you did not file return, then higher TDS rate would be there under section 206A. But this is not applicable in the case of section 192, 192A, etc. That means in this section, even if you did not file your return, then higher rate of TDS would not be applicable. Only on those specified person category case, higher rate of TDS would be applicable. Okay. So 206AB, who is the person not file return payer, what I just said. Please read these provision after today class. And when you will read it after that class, Then if there is any problem, we will solve it in day after tomorrow. Do not worry, okay? Now, what is advance payment of tax? Section 207 to section 219. This is a very logical concept. These are all types of collection what we are discussing. General rule was that the income of previous year is going to be taxed in the next year, that is our assessment year, as the charging section 4 explained to us earlier in the basic concept of it. But income tax said why we should wait. We should have some tool to collect those taxes earlier. So for that purpose, tax collection tools has been introduced, and the name are TDS on the basis of some source of income, advance tax, and TCS. So we have seen that TDS is on the basis of some specific source of income, except section 194N. Okay. Now we are on advance tax concept. The advance tax concept says that if any person whose estimated tax liability is exceeding 10,000, then that person need to deposit this tax on installment basis. So a specific date has been prescribed and a specific percentage has been prescribed. Department says first date would be 15th of June of your previous year. So on 15th June 2024, so the year has been started from 1st April 24. So April, May and June, almost 2.5 months has been passed away. So the concept says, the advance tax liability concept says, the first date of deposit of advance tax liability would be 15th June 2024. So what we need to do? Now we have the actual data of my income, whether it's salaried person, business person, etc. does not matter. So the actual data is from 1st April 24 till 15th June 24. So that means 2.5 months actual data I have only. On the basis of this 2.5 months actual data, we have to estimate our full year income. This previous year 24-25 total income I have to estimate. Suppose I am a salaried person. My salary is suppose 1 lakh rupees per month. So that means I can estimate my income. There is no need that your tax and income should be accurate. No, you just need to estimate it. The actual income can be higher or lower, but we just need to estimate our income on the basis of our 2.5 months data. As practically, if I'll ask you how much marks you are estimating in your examination today, subject wise, whatever preparation you have done till now, if on the basis of that preparation I will ask you that what is your opinion that how many marks you are going to get in your examination. So might be some of you can say I will get 45, somebody will say 47, somebody would say 53, 54, depends. So this is an estimation for your marks, but that could be not accurate. The actual marks, whatever you will get after the examination could be higher, lower and equal also. It depends. It could be equal also. It could be same also. In the same way, this assessee should estimate its income. If he's a businessman, then whatever is sale for 2.5 months, on the basis of that, whatever is GP or net profit on the basis of these information, so he can estimate income. So whatever total year income he will estimate, now he has to calculate tax on it. Estimate. That's why we call it estimated tax liability for the full year. Remember, after 2.5 months, first date is up to 15th June 24. You have to estimate your yearly income and you have to estimate the tax. Whatever will be your tax, out of that, estimated tax liability, 15% is your advance tax liability. 15% of this estimated tax would be your advance tax liability. So in real life, it is very difficult. If my client wants to know how much would be his advance tax liability, it's very difficult. Because on the basis of 2.5 month data, I have to analyze his income, expenditure, his interest income could also be there, his house property income, deductions, rebate, etc. But I have to do it with the help of software, etc. But practically it's difficult. But for the purpose of examination, it's not that difficult because in the examination, in the question, the estimated income for the year will be given. So whether it's estimated for your benefit, the full year income would be there. Whether it's estimated or not, you just need to know how to calculate the tax. So on the basis of 2.5 month data, maybe in the question it would be written that on the basis of 2.5 months, his income would be 15 lakh in the year. Calculate advance tax liability on 15th June. So on that 15 lakh, you have to calculate the tax, whether at the default tax regime or optional tax regime, that would be given in the question. If question is silent, then preferably you should go for default tax regime. So you need to know the slab rate and all the tax calculation procedure. On the basis of that, you just need to calculate your tax. And the name of that tax would be only estimated tax liability. And 15% of it would be your estimated advance tax liability on that date. So that would be your first date, and this would be your first installment. The second date would be after 3 months. Now it would be 15th September 2024. Now after 15th June, on or up to 15th September, now you have data of almost 5.5 months. April, May, June, July, August, then 15th day of September. So now you have actual data of 5.5 months. Now in my estimation would be better. If I'll ask you, which estimate you think would be more accurate? On 15th June estimate for the full year income would be more accurate, or the 15th September estimate would be more accurate? Suppose after 1 or 1.5 months, I will ask you how much marks you will get. So I guess the accuracy of your estimation would be better. Now on the basis of 5.5 months, again you have to calculate your full year total income. That would be higher, that would be lower. Suppose if there is any loss incurred between June and September, so that could be lower. If a profit or any new order has been come to the business, it could be higher. There could be a capital gain income, there could be a casual income, etc. So on that estimated total income, again you have to calculate your estimated tax liability for the full year. On that, now the advance tax liability is 45%. If advance estimated tax liability is less than 10,000, in any case, there is no requirement of advance tax liability because up to more than 10,000 only these provisions applicable. So on this second date, we have to deposit 45%, but out of this 45%, suppose it comes 1,20,000. This 45% is suppose 1,20,000. And 15% was earlier 21,000. We have deposited it. So now this 45% include this value of 15%. So out of this 120, 21 we have already deposited. So the advance tax liability would be 99,000 net. So whatever we have deferred earlier need to be reduced. The third date would come after again 3 months. 15 December 22. Now I have almost 8.5 months actual data. My accuracy would be more better in this. So now again I have to calculate my estimate total income. And again I have to calculate estimated tax liability. So in the question, the examiner will provide you all estimated total income for all these 3 dates. You just need to recalculate your tax on the basis of normal tax calculation provision. what would be your estimated tax liability? 75%. Now need to be your estimated tax liability. So now suppose this is 1,60,000. Out of this, you have deposited 21,000 because 75 including 15 and 45 also. And then you deposit 99,000 also at this time. So the balance you need to deposit, that would be your advance tax liability. Clear? Now the last date is 15th of March. So almost we have completed 11.5 months actual data we have. So this would be most accurate estimation. Suppose after examination, if I'll ask you how much marks you will get, so that would be the most accurate marks estimation according to you. Again, estimated tax liability. And now we have to deposit 100% of this estimated tax liability as advance tax liability. Whatever it was, whatever we have deposited in last 3 previous installment need to be reduced and balance would be your advance tax liability. Understood? So it's just a calculation of tax on these specific 4 dates. If you are running a business which is under presumptive taxation scheme, 44AD, 44AD, etc. Remember the PGBP? In those cases, the first 3 dates are not applicable. No advance tax liability need to be calculated if you are under section 44AD or ADA. Only at the last date on 15th of March 25, you have to calculate your estimated tax liability. 100% need to be deposited on this date. So for these presumptive taxation scheme, there is only single date for advance tax liability deposit with the firm. So this was advance tax concept. Now when we will go through with the provision, you will understand the concept, why we are reading these estimated tax word, what is the concept of advance tax liability, what are these dates, etc. So that's why I've explained you the summary of the advance tax liability concept. So now let's read with the provision. Liability for payment of advance tax. Tax shall be payable in advance during any financial year in accordance with the provision of section 208 to 219 in respect of an assessee's current income. The total income of the assessee which would be chargeable to tax for assessment year immediately following that financial year. Advance tax liability would be applicable if your tax, where the advance tax payable is 10,000 or more. So remember, it's more than or equal to 10,000. So if your tax liability is 9,999, then there is no requirement for advance tax liability option. An assessee who is liable to pay advance tax of less than 10,000 will not be saddled, imposed with interest for section 234 and 234C. What is section 234 and 234C? That we will discuss later. The senior citizen, if you are a senior citizen and do not have business income, then advance tax provision not applicable upon. Suppose there is Mr. A whose age is 65 years, resident. His income is suppose 50 lakh from pension. Tax liability suppose 10 lakh rupees. And if he does not have any business income, whether other income is there, interest income, etc., but no business income, then he does not need to deposit any advance tax. He will deposit tax as normal case. Maybe TDS is applicable upon him, etc., but advance tax liability is not upon. So a senior citizen who have passive source of income like interest, rent, etc., in order to reduce the compliance burden on senior citizen, exemption from payment of advance tax, not having any income from PGBP, and if the age is more than 60 years, then there is no liability for advance tax. Okay. computation of advance tax, how we need to compute your advance tax. There is no difficult calculation for computing the advance tax because it's a normal calculation of tax. Everything what we are discussing is estimated. That would be given in the question. That estimated yearly income on 15th of June was this. So you have to calculate tax accordingly, and 15% would be your advance tax liability. You have to go through with this provision. If there would be any problem, then I will solve it for you, students. Installment, what we have discussed is over here. You can see except section 44 AD and ADA. The first date was 15th of June and the rate is 15%. Then 15th of September, not less than 45%. Reduce any advance tax has been paid in earlier installment. Whatever you have paid on 15th of June is going to be reduced. 15 December, 75%. Whatever you have been paid earlier is going to be reduced. 15th March, 100%. Whole amount means 100% of advance tax liability you have to deposit. Any amount paid by way of advance tax on or before 31st March shall also be treated as one tax paid during each financial year ending on 31st of March. Now you can see in case of section 44 ADA1 or 44 ADA1, AD1 or ADA1, only one date is there and the last date is only 15th of March. On 15th of March, you have to deposit 100% of your advance tax liability. These provisions is for your reading purpose. Credit for advance tax, whatever amount you will pay for advance tax, you can get the benefit of credit. That means from your tax liability, as TDS is going to be reduced, in the same way, advance tax also going to be reduced from your tax liability in the assessment year at the time of calculation of your or filing of your income tax return or calculation of your balance tax. Now, interest under section 234B and 234C. So there was certain advance tax liability you have to dispose of on specific dates. Now 234B and 234C says that if you default in paying advance tax installment on the specific dates, then you have to suffer from interest under section 234B and 234C. How it would be, let me explain you. We will solve with the help of an example. Nidhi is asking what is meaning of passive income. Passive income means, Nidhi, which incomes are not direct income, like interest income. Like I am a professional, I am a CA. So my main income is from consultancy work, audit work, etc. So that is my main income, active income. And whatever amount I deposit in my FDRs or whatever amount I invest as an investment, whatever income I am receiving as other income, those are called passive income. Interest income, dividend income, rental income, those could be my passive income. Okay. Okay, so section 234B, interest. So this example is very important. You will understand the advance tax provision as well as 234B and 234C interest provision also in the same example. 34C. Okay, so take an example. Suppose there is Mr. A who is doing a business. On 15th June 2024, he estimated his full year income. The estimated total income for previous year 24-25. Suppose he estimated his total income for the full year would be 15 lakh from business activity, his net profit. Okay. And 1 lakh from, this would be his net profit, and 1 lakh from income from other source, interest income. Now the question asks you to calculate his advance tax liability. Now what we need to do? We just need to calculate the tax on this 16 lakh rupees income. So on this 16 lakh rupees, the normal slab rate is going to be applicable. Suppose the question asks you to calculate the advance tax liability on the basis of optional tax regime. Is there any income which is going to chargeable to tax with a special rate like 15% or casual income? No. So these income is going to be taxed as per slab rate. And Mr. A aged is suppose 50 year and he's a resident. So up to 2.5 lakh rupees exempt, and balance is going to be taxed at the rate of 5%, then 20%, then 30%. According to it, if you will calculate, then his tax would be 2,92,500. Upon 16 lakh, we have just calculated the tax. And the cess also we have to calculate as per normal calculation of tax. The 4% cess would be 11,700. And total would be 3,04,200. So my tax, you can see, is exceeding 10,000 rupees. And because it is exceeding 10,000 rupees, so advance tax liability would be there. Tax is equal to or more than 10,000. Now in this date, how much I need to deposit as my advance tax liability? What is the percentage? The percentage is 15%. So what would be my advance tax liability in rupees? 15% of this value. Clear? So that would be 45,630. Now, this is the advance tax liability you need to deposit. But in the question, it could be said that Mr. A did not deposit the full amount. Maybe. Suppose he actually deposit only 40,000. So the difference, the shortfall would be 5630. It is possible that he is going to deposit the full amount, but in the question, it is not mandatory that the question will say that he deposited the full value. Suppose the question say he just deposited 40,000 out of this 45630. So difference is 5630. Whatever would be a difference over here, this would going to charge 234C interest. So why 234C is applicable? If you did not deposit the full amount of your advance tax liability on the respective dates of installment, the shortfall is going to be chargeable as interest under section 234C. And the rate of 234C, I am explaining you the provision in the same example for advance tax as well as 234B and 234C. The rate of interest for chargeability of interest under section 234C is 3% on the shortfall. It's not per month, it's not per annum, it's fixed 3%. So technically 234C interest as per amount in this case would be 169 rupees. Clear? 234B is not applicable right now. I will tell you when 234B is applicable. So 234C would be applicable if you did not deposit the advance tax liability on the specific date. Now the second date would be suppose not suppose, of course, 15 September 2024. Now your estimated income for 24-25 on this date, the PGBP income due to some cancellation of order between June and September. Suppose the net profit now we think is not going to be 15 lakh. It is going to be only 12 lakh rupees. The interest income suppose remain the same 1 lakh. And suppose there is a new capital gain, long-term capital gain, chargeable at the rate of 20% has been arised. That is 1 lakh rupees. So now my estimated tax will change. Upon this value, I have to calculate tax as per slab rate. And on this long-term capital gain, I have to apply 20% tax rate. So upon 13 lakh, I will calculate tax. That would be 2,02,500. And on 1 lakh at the rate of 20%, that would be 20,000. So my tax would be 2,222,500. And if we add education cess, $8,900. That would be 231,400. Now, the second date, I require to deposit 104130, out of which we have deposited only 40,000 earlier. So the remaining I need to deposit is 64,130. Suppose we have deposited full value on this date, 64,310. No shortfall. That means no interest. If there would be any shortfall, the rate of interest again 3%. So in this case, there would not be any interest under section 234C. Now, the third date, 15th December 24 arrives. I again estimated my income. And suppose now I find it out that my net profit from this business would be 20 lakh. My interest income would be 1 lakh and my capital gain would remain 1 lakh. No increment. Now I have to again recalculate my tax, and that would be after including the long-term cap gain, the tax liability would come 462,500. If I add 4% cess, that would be 481 tax liability. Now, out of this, I have to deposit now 75%. This is going to be now 360,750. How much I have deposited? 40,000 I have deposited earlier, and 64,130 I have also deposited earlier. So after reducing it, my advance tax liability for this date would be 256620. Now suppose we have deposited only 2 lakh rupees on this date. So the remaining shortfall, that is 56,620, is going to again for 234C interest. And that would be, with 3%, it would be 1699. I hope it's clear till now. Now the last date arrives. On 15th March 25, suppose my estimated income remains the same, 20 lakh. 1 lakh and 1 lakh. So tax liability would be same 481,000. I have to deposit 100%. So that would be 481,000. I have deposited 40,000 once. I have deposited 64,130 once. And I have deposited 2 lakh rupees. So 481, if we deposited 40,000, 64,130 and 2 lakh rupees. The remaining is 176,870. So in the last date, suppose we have deposited 64,130. Suppose we have deposited only 1 lakh. So the remaining 76,870 will go for interest, and now the rate would be changed. That would be now 1%. And if the last installment is shortfall, the rate would remain 1%. So the remaining would be 769 rupees interest would be there. So 234C interest total would be 1699, 769 and 169 would be there. 169, 1699 and 769. That would be 2637. So that would be approximate 2637. So that is advanced tax question, how we need to solve and how to calculate the interest under section 234C. But now 234B interest we have to discuss. Now listen very carefully. When 234B interest is going to be applicable, and then you need to tell me in this question 234B is apply or not. 234B is saying if total advance tax paid by you is less than or up to 90%, is less than 90% of assessed tax. Whatever tax you have assessed, whatever your actual tax liability. Suppose in this example, your actual tax liability is 4,81,000. So whatever advance tax paid by you, if it is less than 90% of assessed tax, then 234B interest would be applicable. Now, technically, my assessed tax in this case was 481. So I have to find it out the 90% of this tax. So 90% of it was at least 4,32,900 should be paid as advance tax to escape from 234B interest. How much technically we have paid as advance tax? Actual advance tax paid by us was 40,000 plus 64,130 plus 2 lakh and plus 1 lakh. Actually, we have paid 4,04,130. This plus this plus this plus this. So we at least need to pay 432,900 from to avoid this 234B interest. But technically we have just paid 4,04,130, which is less than 90% of, which is less than 90% of assessed tax. So that means in this example, 234B interest also applicable. 234C is also applicable. Suppose in this example, if he deposited more than 4,32,900, suppose the last installment was, suppose 1,50,000. So in that case, this limit would be more than 4,32,900. So there would not be any 234B interest. But in this case, now 234B interest is going to charge. Now, how 234B interest is going to be charged? That is going to be continued. in the next chapter, in the next class, because I know that is actually going to be a lot of provision we have discussed today, and you might be feeling massive provisions or a lot of discussion we have done. So you should go through with the provision, revise this topic, how 234B is going to be calculated in this example, or what are the provision for calculation of 234B. That we will discuss day after tomorrow. Day after tomorrow also we will complete TCS concept and we will discuss some MCQs. I have prepared almost 32 MCQs for you and some test your knowledge question also. So if you have any query, student, you can ask. Ishan is asking, sir, in examination, will we get total estimated income for all the due dates of advanced tax? Of course, because if their estimated total income has not given in the examination, how you would be able to calculate estimated tax liability? So estimated total income you will get in the examination. You just need to calculate tax upon it. $7.39, Nidhi, what is you asking on 7.39? Let me see. Nidhi is asking something on page number 7.39. Sahil Kumar is asking how income tax knows our estimated total income if we do not pay sufficient advance tax. Sahil, when you will file your actual income tax return in the assessment year, in that case, income tax will see that your tax is higher than that or whatever advance tax you have deposited. And actual tax liability you are showing to the income tax department, they can check that you have paid less amount of tax. Nidhi is asking meaning of fees for technical services. I have given you some work for reading, Nidhi. In that reading case, the technical services definition, professional services definition has been given in the question, in the reading. So when you will read those provision, you will understand the meaning of technical services. He's saying overview. It's not possible. You can scroll back this video. We are on YouTube, and you can again go and understand the meaning of section 190J. Any particular thing you are not able to understand, then I can explain it to you. What about in first and second installment? When you will earn your income on first installment or second installment, the income tax will able to find it out, because when you will submit your net profit to the income tax department at the time of filing of return, so they can proportionately check that what amount of advance tax you should have deposited according to that profit or salary, etc. And if they will find it out that there was not sufficient deposit of advance tax, then you might need to pay interest and you might need to pay penalty also. Any other query, students? Anyone wants to ask anything? Ashok sir, I think there is no more query. So we can. Okay, Soumya is asking something. Sir, why 1% interest rate in last installment? Act has been prescribed it. The logic behind is that if you defaulted on the first installment, that is for 15th of June, and the second installment will come after 3 months. So automatically your default will be for 3 months. So that is 1% per month. Technically, the rate of interest is 1% per month. But suppose somebody did not deposit full advance tax on 15th of June. Now the next date would come after 3 months. So automatically 1% per month means there would be 3% rate. So the rate is 3% directly. Same if you are not able to deposit on 15th of September, the next date will come after 3 months. So 1% per month, total is 3%. Same is from 15th September to December. But on 15th March, if you defaulted, then the month and the year is going to be end on 31st of March. So only 1 month default is there. So the rate is 1%. But this why kind of question you should not ask, because we have to learn the provision. We are not going to go behind the logic of the provision. That is not going to be asked in the examination also. Okay. Any more queries, students? So, Ashok sir, we can close the session now. Thank you so much, Ashok sir. Good night.